Time now to play bull market or BS. China, as we mentioned, reporting a 26% year-over-year increase in imports today. First rise in 13 months, suggesting strengthening domestic demand. So with the FX side, the ETF that tracks the Shanghai Composite down more than 4% in the last month, is it time to rethink the China trade? Joining us with his thoughts, Peter Schiff, president of Euro Pacific Capital, author of Crash Proof 2.0. Peter, it is always a pleasure to have you on our program.
Thanks for having me on.
Playing the China booming economy, is that trade still on?
As far as I'm concerned, it is. You know, 4 months ago, back in August, I actually launched a mutual fund called the Euro Pacific Halter China Fund, which only invests in Chinese companies, specifically those focused on domestic demand. And that fund is up better than 20% in the last 4 months. So it is not declining like the numbers you just indicated, because we're simply focusing on the stocks that are generating revenues in domestic China, not looking at the companies that are exporting to the U.S.
A lot of the industrials here in the United States, American companies, Peter, that do business in China, they did quite nicely today. Do you have any picks in your portfolio that you like in terms of U.S. companies with exposure there?
You know, our fund doesn't actually buy any of the U.S. companies. We're mainly buying stocks in mainland China and other Asian companies like in Singapore that derive their revenues and do business exclusively in China. I mean, there are some U.S. companies that get some of their revenues in China, but they don't get all their revenues there. And I want a pure play on China. I am very bullish on Asia, in particularly China.
Oh, Peter, it's Karen. Are you more interested in the consumer? Are you more interested in the infrastructure bet? What is it, or any of all of those?
Well, the entire economy, but I think it's going to improve more remarkably when the Chinese government finally withdraws their stimulus to the U.S. economy, when they stop artificially suppressing the value of the RMB and they allow their currency to appreciate. It is going to empower the Chinese middle class. It is going to make even more capital available for domestic investment. And I think you're really going to see an economic boom in that part of the world. Unfortunately, it's going to correspond with a bigger bust over here. And I wish that we can get our economic house in order so that one day we can participate in some of that growth ourselves.
Peter, let's go back to China. When you talk about economic stimulus, do you have concern? Because I would believe that China would remove their own domestic stimulus first before the U.S. moves here. Are you concerned, and you have the exposure in your portfolio, the Chinese removing the stimulus domestically?
Well, I'd rather have them remove the stimulus of creating more RMB. They're expanding their money supply. They can get a better stimulus if they simply allow their money supply to remain constant, but allow the value of their money to rise. That would give a much better stimulus to the Chinese economy, and it wouldn't be distorting the economy in the way that it is. I still think that the stimulus is hurting the Chinese economy, but it will, the underlying strength of that economy will overcome the problems that the government is creating. But the economy would be much better off if the government was not doing what it's doing.
So, Peter, if the Chinese economy and the stimulus starts to come in and eventually we will see some of ours, why wouldn't Freeport-McMoRan or some of the names that are locally here, some of the coal names, some of the steel names that are exporting over there to build into that infrastructure build-out and the stimulus, why wouldn't those names be extremely attractive?
They will benefit. I own some of those names. I don't think they're the best way to play it, but certainly if you're limiting your investment horizon to U.S. companies, those are the ones that you should look at. The main problem I have with the domestic companies, apart from valuations, because the valuations are higher here, is I'm very afraid of the Obama administration and Congress and what type of punitive taxes and regulations might come on these companies, particularly since I believe they're going to make a lot of money. There could be windfalls profit taxes here. I don't trust this administration. I don't trust the government, so I'm afraid to make investments in U.S. companies. You know, that's one of the reasons I'm running for the United States Senate, is so I can try to go to Congress and try to undo all these the legislation
Peter,
that is encumbering our economy.
I want to go back to the trade here. You're an expert in China because you have a China devoted portfolio. What is your favorite domestic Chinese company that U.S. investors can invest in from here?
Well, look, the one that is my favorite right now, is my favorite because I guess we've made the most money in it, is a company called Skyworth Digital. And, you know, that stock is up, I don't know, 1,500% this year. So a lot of my clients who own that one, and we own it in our China fund, are very happy about it. But, you know, most of them haven't gone up that much. But there are a lot of other companies in China that are performing well. And, you know, most Americans are going to have a hard time buying them if they don't trade in the U.S. and they don't have ADRs. But they are available. We own them in our fund, and we own them for individual clients in our managed accounts. I own a lot of them myself, and even in my brokerage accounts.
Hey, Peter, what do you think of the steep contango in the oil market right now?
Well, you know, I don't think it's going to stay there, but I do think that don't know where that music is coming from either. But I think, look, oil prices are going to rise. I mean, there's no question about that in my mind. And it's going to be a function of money creation all around the world that is debasing currencies and is going to cause prices of all commodities to rise.
So you bet on backwardation and you're selling contango.
Yeah, what is that noise? I mean, I'm here to, I can't.
All right, Peter, we got to let you in on the joke. Whenever we play contango, we show a couple tangoing.
Oh.
As an illustration of the term.
Tango. Okay, I get it.
Thanks for being a good sport, Peter. Always good
Sure.
to see you. Peter Schiff, your Pacific Capital. Don't go anywhere. Lots more rapid-fire word on the street trades on the way, including the surprise sector of the week and the Red Box CEO and how.